Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, March 4th, and it's around 4:15 New York time. The week is going to get a lot more interesting just because there's going to be a lot more economic data coming starting the morning of the 5th. We're looking for ADP, 140,000 jobs to have been created in February on the private payrolls. Factory orders, we're looking for an increase of 1.6% month over month, and ISM services, we're looking for 52.6, down from last month's 52.8. Jobless claims are always going to be an important number, especially now that we're seeing some federal workers being laid off. We're looking for 235,000. Continuing claims expected to increase to 1.88 million. Unit labor costs expected to remain unchanged at 3% versus the initial estimates. Productivity expected to remain unchanged. Non-farm payroll on Friday morning looking for 160,000, up from 143,000. The unemployment rate's expected to remain unchanged at 4%. Average hourly earnings expected to decline to 0.3% from 0.5%. And earnings year over year expected to remain unchanged at 4.1%. We also have Jay Powell speaking on Friday as well. So a lot of stuff happening between now and then, and a lot of things that we've seen in the market could change rather quickly based on some of this data. But what's becoming really clear is when we look at things like the euro made a pretty big move today. We talked about now for some time about the euro being stuck below this 105.20 level. That all changed today. Today the euro finally broke out, and today the euro pushed on to 106.20. This is a level we had talked about as potentially being a spot it could go to. And it looks like right now that's the level of resistance we're watching. And clearly a breakout above that level sets up the potential to move all the way back towards 108. It looks like there could be some residual levels of resistance somewhere around 106.5. Although I put this in the less likely camp just because we can see that when we came down through it, we really didn't hold there very long at all. So if we do get above this 106.20 region, I would expect that you're going to see a move up towards this 108 area. Likewise, now this 105.20 area should act as very strong support. If it doesn't serve as support, it's a very negative indication and would probably suggest the euro's heading back towards 102 just because of how important it's been in the past. So right now, this looks like it's probably a breakout. It looks like the euro can probably go higher. You're seeing clear momentum trends on the RSI, and so we're just going to have to continue to watch this. But again, I would think you're probably going to see I think we could probably see a move up towards 108. When we look at the pound, very similar type of move. We finally broke out above resistance. Now we're hitting resistance around 128. You can start to see, though, the pound is starting to get already almost overbought. Not quite there yet, but getting close. The RSI is at 67. You can see we're already hitting the upper Bollinger Band. So there may be some further room for the pound to continue to rally. Again, there's some big areas in here where the pound can really rally quite meaningfully, perhaps all the way back to 130. Given what we're seeing here, there's just not a lot of support and resistance built up in this region. And that would probably suggest that the pound could really have a pretty clean shot to much higher levels. You know, the only thing that really stands in its way is if it gets moving too quickly and then it just kind of, has to pause and consolidate for a little bit. Again, this is all going to be data dependent because clearly if we get a big data report that's going to be favorable to US dollar, this all changes. But I would think as long as things come in line and around expectations, you're not really going to see much of a change in trend. Just because it looks like these trends are starting to pick up some really serious momentum. And you're also seeing the same thing with the yen. Although the yen hasn't really quite broken through support yet. It tried to earlier today. You can see the big long candle wick. But it looks like we came back to support around 149.5. So again, we're still waiting to see what happens here with the US dollar, Japanese yen. But overall, if we're going to see the dollar weakening, then I think that you're likely to see the yen strengthen versus the dollar here as well. It doesn't seem to make sense for it not to be the case. We've talked about oil quite a bit. It got down to a low of 66.80, and that's where it bounced off of. Again, this is just showing us that oil continues to find bounces every time it seems to get into the $66.50 area. This has been, quote unquote, the floor. And so, if oil's going to bounce here again, it kind of strengthens the case for why oil can actually rise. So until we really see some hard evidence that oil is going to break 66 and a half, you really have to almost favor the upside. I know that that's probably not consensus. I get that that sounds maybe kind of odd, but again, just like the euro, eventually it broke. But I think until it breaks, you have to be really careful, because I think that the more you hold at a level, the greater it is an indication that that level is just going to continue to serve as a major level of support and resistance. And you can see that that has been the case now for some time. You can see even in the fall of 21, we came down and tested and at that monster rally. Same thing here. We came down and tested it a bunch of times and we eventually took off. So, I think you have to keep that in mind with oil. I think that's just the way it's looking at this point. I guess we'll touch on copper as well, because copper finds itself also at an interesting level of support, around 460 or so. Last week we had gotten news that there was going to be tariffs placed on copper, or there was going to be a look at it. We got a big rally in copper. Notice it got right up to resistance around 472, and that's where it stopped. We came right back down to 457. We've been testing this area now for a little bit, and we'll have to see what really happens here, because, again, this is another spot where, if copper is going to break, you could see it move back to around 429. But if this level is going to hold, then you could see copper really move up to around 472 again, especially if you're going to start seeing the dollar. And that's the other aspect to this as well, because if the dollar really does start to weaken, it actually becomes more of a bullish scenario for copper and even for oil. So those things are, important to keep in mind as well. And we'll just have to continue to monitor this going forward. But 455 to 457 region on copper continues to hold. I think you should favor the upside, especially if the dollar continues to weaken. We're seeing volatility in the equity markets get really crazy. Today, the DAX was down 3.5% after being up 2.7% yesterday. At the end of the day, the DAX is just kind of trading sideways. The move higher in the DAX yesterday almost had like this blow off top type feel to it, just because we're seeing, the earnings estimates in the DAX really flatten out, and we're really seeing that growth rate beginning to come down. And really, the DAX is rising on pure, multiple expansion, and and then all of a sudden you get this big blow off type top on Monday, only for it to be completely reversed today. Clearly, I think it's easy to see that, we have really this big level of support in this 22,130 area. That's the level that needs to break. If that breaks, you can start thinking about 21,310. Otherwise, maybe we're just going to be stuck and be range bound in the DAX between this, 22,130 region and maybe even this 22,900 region. But again, that move in the DAX today, the last 2 days, is very suspicious to see such big moves back to back like that. And you can clearly see that the RSI is really rolling over here. And now clearly coming back down, a sign that momentum is potentially changing. The move in the DAX, obviously, now for some time has been quite impressive and rather amazing when you really take a step back from it since October of 22. And we really haven't seen any real major pullbacks or corrections in it. So, again, I would be mindful of where this is right now. And this is the level that I would really be very careful of at 22,130. The FTSE also had a really big reversal today. Again, for the most part, the FTSE's been trading with copper. That really hasn't changed very much. It hasn't always worked perfectly, but for the most part, you can see since 2021, it's been a really good guide. And so, if we start seeing the dollar really weakening and we start seeing copper really pushing higher, that could be our signal that, the FTSE can continue to do well. But again, at the same time, if we start seeing copper slipping, that could be an indication that, the FTSE is going to come back down. When you look at the FTSE, it's not really particularly overbought on the RSI. The Bollinger Band, you can see we tested it, got up to it. So there is certainly room to consolidate around the 20-day moving average, 87.35 or so. You could even move down to the lower band at 8,600. But I think overall, is if copper is going to continue to move up, I think the FTSE is going to continue to move up, and I think that's been a really good thing that's worked for us for some time now, and I don't really see any reason to change that at this point in time. The Nasdaq had a pretty wild trading session today. Just to show you really quickly, we opened sharply lower today, only to rally all the way back. We hit the 61.8% retracement level from this high yesterday to this low today. And then we basically sold off in a straight line in the final 30 minutes of trading. I mean, I think, again, this is going to be pretty much par for the course at this point, just because I think there's a lot of uncertainty in these markets here in the U.S., especially with, potential trade wars, and we're not really sure how all this is going to play out. Additionally, NVIDIA's results really didn't impress the market. That's obviously come under a lot of pressure. And you can see that really on the Nasdaq, how important this region has really been for it. And I would even extend it a little bit lower and say right here. So between this 20,350 and 20,700 area, I would say that's a very important zone. You can clearly see that today we got up to that upper end of the zone and it was rejected, and we closed below both of those areas. And in fact, we even intraday filled the gap from the election. So what this is kind of implying to me is that if we don't gap higher tomorrow and quickly take out this 20,700 area, which may not be easy to do, I think that you're looking at a potential here where the Nasdaq's going to actually start turning and going back down the other way, and potentially maybe come back into this 19,300 area or so, because that just looks like there's a giant gap there that was never filled. When we swing over to the S&P, a very similar type of move today. Again, we had this big, rally, snapback rally. S&P 500 trades nearly 2% lower. We rallied back to the 50% retracement level, give it all back in the final 30 minutes or so of trading. Again, very similar type of setup here. We're looking at a scenario where big uptrend in the S&P has been broken. We have this gap that was basically filled back here mid-January. Now we came back, we closed underneath that gap level. That sets up, next level of support at 56.90. You break 56.90, I think there's a chance to come back down into this region here, potentially around 5,400 or so. I think there's that much room to potentially go just because of the way we moved up so sharply. And again, if the trade war talks really begin to escalate, you have to wonder how much people are going to be willing to pay these high multiples for stocks when margin compression could be something the market is facing in the future. And if margins start coming down, typically that's an indication of risk off, and that's going to really probably weigh on markets. Finally, we'll look at the Dow. The Dow filled the gap that was created here. That was created, again, these are important levels just because you can clearly and identifiably see how important they've been in the past. So right now we're watching to see if make sure this 41,850 level holds. As long as you hold above that level, then you got to favor upside, just like on the other indices as well. But obviously, if you start breaking 41,900 or so, that's going to really start setting up moves to much lower levels, maybe all the way back to even 40,300 or so. There's just a lot of room to go in these indices. They've obviously had a very big move. And if the picture is going to really start changing in a material way, people are going to start pulling back on risk. And, one place you do that, obviously, is through your equity exposure. Anyway, have a great week, and we'll see you next. Bye.